Good morning, listeners, and welcome to the Trade Talk podcast. Today, we will first discuss the trends in the domestic market and then we will cover the global markets. On Wednesday, the market failed to maintain the level of 16,700 as expected. On a daily basis, the market has formed a hammer pattern after reaching a previous high of 16,700, which is a bearish indication for the market in the short term. However, looking at the option statistics, the support has shifted from 16,400 to 16,500 levels, which would reduce the downside for the market. Today, the day of the monthly expiration of FNO contracts, the 16,600 level would serve as the trend setting level for the market. Above the level of 16,600, the Nifty would move to the levels of 16,700 or even 16,800. On the other hand, if the Nifty stays below the levels of 16,600, the 16,500 would be the base level. While looking at the short-term trend of the market, then it is holding well above the short-term averages and above the level of 16,730, we can expect some short covering in the market. According to the FNO positions, the FIs have been bullish in the short term and retailers have also joined the FIs outlook. They have reduced call writing and sold some more put options. The strategy should be to buy if the Nifty corrects to the levels of 15,530, 15,500 levels, or on the reversal formation at 16,600. Yesterday, the Nifty closed at 16,630, 640 levels. Short covering is expected above 16,730 levels. Be stock specific. Focus should be on private banks, consumption related companies and select metal companies. We like Hindalco, Nalco, Tata Steel as well as Steel Authority based on their broader formation. From the consumption basket, we are going to focus on Jubilant Food, Burger King because there we are seeing technical reversal formation, and from the private bank side, HDFC Bank, ICICI Bank should do well. Globally, views are split on whether Chairman Jeremy Powell's speech Friday at Jackson Hole will provide a clearer guide on when and how the Fed will scale back its emergency support. While the ongoing economic rebound and elevated inflation add to the case for starting policy normalization, the fast spreading Delta virus strain threatens a slower pace of recovery than some had expected. Powell's speech will likely emphasize the economic recovery is well past the crisis and that they will shortly announce that they are ready to taper asset purchases. So globally, the indications are mixed, but one thing is very clear that maybe not this time, but in the next policy, certainly they are going to taper asset purchases, which is going to impact equity market. But yesterday, when we going through with the 10-year bond yield, then it was around 1.35 from the levels of 1.25, which shows that investors are running for equities, and that's the reason it is going up. Yes, it also indicates that inflation is going to increase, but at least in the near term, the fear is on the bond side. I am to say investors are more willing to invest in equities. Friends, that's all from my side. With this, I am ending today's morning podcast. Thank you very much for listening in and staying connected with us. Have a great day to all of you.